The marquee topic for today is AMC. Now, AMC is up 7.5% today after being up 25% on Friday, and it is going off right now. They had pretty decent earnings. And so, as the title says, Fat Man Zoom, is it time to take something like AMC, which was once considered a meme stock, seriously?
The short answer is yes. For the short term.
Yes.
For the long term, I don't think so.
Yeah, I think that. So, just let me just preface by saying this. The company announced on Thursday that it successfully completed a sale of 43 million shares to basically raise money that they had to pay back over the pandemic. And so that was one big positive catalyst for them. They went up to...
Which is a smart move.
Yeah, absolutely. It's not like the dilution they had was toxic, that they're just using it to pay all their executives and just screw everybody else. They're at least putting it back into the company. Here's my thing, though. Let's take a look at the stock. First of all, it is at a crucial resistance right now, Fat Man Zoom, at around $14 a share. If it breaks up over that, I think it does have some more room to run. My big concern is that the pent-up demand, if there is any, is probably going to be in short order. Because if we look at the way that movie theaters were trending before the pandemic, they were kind of going the way of the dodo bird as well. Like they weren't, a screaming business. The growth in movie theaters wasn't like, I mean, unless they took this time to like really focus on the experience and make the experience better to actually draw crowds in. I just don't know how this is going to be more or less of a sustainable move.
Yeah, I mean, I'll be honest. You have been really bearish on movie theaters and talking about them moving away. I never shared that sentiment. At some point, sure, they may evolve. They may move away. I don't really know. I have no interest in picking up AMC. If somebody wanted to get AMC or wanted to, back when you were talking about it, I thought it was a fair play for reopening. I thought it was safe. And I don't want to say safe. That's not a good word.
But that was at like $6 is when I was talking about it.
But I thought it was fair. And I even still think that because even where it's at now, listen, it's going to be a bumpy ride. It's going to be volatile. But only because of their short-term moves could benefit it short-term. And all they have to do is report that we got numbers coming in to the movie theater. And I do think there's that pent-up demand, but it will eventually likely slow down. I don't view it as like a drive-through theater. I don't view it the same way as like the way drive-thrus went away. I see movie theaters evolving, and the question is, how will AMC evolve? If it doesn't, it will be in trouble. However, I think there are opportunities for it. I just can't say long-term that I would feel confident in for me personally, getting into a position.
Yeah, so there's a lot of people on Reddit, and this has kind of obviously been a Reddit favorite. It's created a huge tweet storm. I think, in my opinion on this, we look at the average spread on analysts comes in at $16 a share. To me, in my opinion, that's probably fair value for AMC. It's $16 a share. You have a lot of Redditors out there, and I've seen it all over the place on Twitter, calling for $100, and they think that this is going to be a repeat of GameStop, GME. This isn't the same situation, folks. I just don't see how this is going to happen. First of all, we've already seen the amount of liquidity that's gone away in the market. Just by looking at our own channel and seeing in the industry itself, just kind of coming off. So lack of interest is obviously comes in the factor here. So I don't think you guys are going to get the same kind of move. Is there still some upside here? I think so. And that $16 mark seems to make a lot of sense.
Yeah, for sure.